Everybody, what's up? We are back with another stock analysis, and today we are looking at Kodak, the digital camera company, and probably some other products as well, but that's what most people know them for. We're going to be looking into them today, focusing on financials and going through their most recent earnings report, as well as a couple other things. So if you are interested, make sure to like, comment, subscribe. Let me know what you think about the video. Let me know what other companies you want me to cover. And yeah, that's about it. So let's get into Kodak. So getting into Kodak, there is a couple things to look at here. So they have a bunch of different segments that they operate in. One red flag I'm going to say right off the bat is analog and digital innovations. This company is almost definitely outdated on the kind of a downturn. I doubt they're going to be fully around in the way that they are for much longer. Just saying that. Now, obviously, they can innovate, have products that are way better than other products that are available. And in that case, they will do well. But from what I understand right now about this company, they're most likely on the kind of declining side of their history. So anyway, moving on, market cap is at $500 million at the moment. If we look, there is no listing at all for target price or long-term growth rate. Right now, we are at $6 a share, which is actually on a recent high. We'll get into that, though, in a moment. Looking at their growth summary, it is mostly negative across basically everything, which kind of says exactly what I've been saying. We're going to see them kind of decline. Sales are expected to decline every single year, upwards of the next 10 years, possibly. So anyway, looking at the chart here, we can see they have a fairly long history here. They IPO'd in 2014, or at least that is when the trading view chart starts here. Let's see when they actually IPO'd. IPO date, first trading date. Okay, so yeah, 2013. So they have been down basically every single day since their IPO, other than in what looks like the whole GameStop fiasco going on in 2020. They did have a massive bull run where they went up almost 1,000% in a week. And since then, again, they've been down from there too. One thing to highlight, though, is they have been in an uptrend all throughout 2024 for the most part, and into 2025 as well. Not a very strong uptrend. It's mostly highlighted by a couple big moves, and that's about it. 25% halfway through 2023, 66% at the beginning of 2024, and towards the end of the year, they saw 2 straight weeks of double-digit growth as well. And then in between, it's just kind of actually declines basically in between. That's about it. So saying that, I would say fairly skeptical on the actual strength of this current uptrend, but overall it looks okay. So let's see how their recent earnings report was, and then we'll really see how they've been doing recently. So hopefully this actually loads up for me. Sometimes it takes a while. Fourth quarter and full year financial results. Let's look into this. Okay, so we have a lot of information to go through here. So fourth quarter, consolidated revenues declined compared to 2023 by just about 10 million. A decrease of 9 million or 3%. So not great there. Gross profit was higher, which honestly is pretty good. Gross profit percentage of 19% compared to 17% the year before. Very solid increase despite declining revenues. Net income was, 420% higher than last year, or 2023. And then operational EBITDA had an increase of 350%. So the company's not doing bad by any means financially. Honestly, they're seeing some massive increases, but overall, we're just not really seeing a ton of significant growth in terms of sales. But either way, the growth in their profitability is pretty promising, but I don't know if it will be enough to offset the long-term declines in sales. There are some management comments here. So their core businesses performed as expected, and we continue to execute our long-term plan, which includes increasing operational efficiency, which, again, we've been seeing for a while. And that is very good for the company, but at the same time, long-term sales declines won't really matter, because their profitability only matters so much as long as they have sales. And if their sales keep declining, the profitability won't matter. So that is something to think about. I think what they really need is to keep their operational efficiency and try to grow sales somehow, but it just doesn't seem like that's really going to be possible. Let's look through here and see if there's any guidance, which I don't see um, here. So anyway, moving on, let's get into the financial statements now, and we'll see how they've been doing over a longer scale. So looking into it, 2024, they did see a decline. They've been declining since 2022 fairly consistently, not a huge amount, but still enough to be concerned. In that same amount of time, though, their cost of goods sold has dropped drastically alongside their sales decreasing. So that is a good sign at the very least. SGA expenses are increasing, which is most likely helping their operational efficiency because they're probably targeting much more closer groups of customers instead of just doing like broad marketing strategies. But so that is probably a good thing. But either way, sales declines is kind of the most important thing to notice here. Looking into their incomes, though, net income has been increasing for 4 straight years, actually, basically 5 straight years, which is a really good sign. But either way, their sales are declining. This can't really hold up long term. So that is just the most concerning thing for the company. Moving on to the balance sheet now, they have 209 million in cash with a total debt of right around $500 million. So that is a little bit concerning there, but most of that long-term debt, or most of that debt is long-term, so that isn't too concerning. But it is just something to keep note of. They do have more than double the debt than they do cash at the moment. But their debt to equity ratio isn't that bad. It's probably right around 70 to 80%, which is a very healthy number to have. So overall, it's not too bad there. Total assets look like they've been fairly consistent for the past 4 years, so there's really nothing concerning there as well. And let's move on to the cash flows. So looking at their cash flows, operating cash flow is actually mostly negative, and in 2024 it was negative as well. We've only seen a few years here where it is positive, so that is a little bit concerning. They are bleeding money through their operations, which is not great. Looking at their investment activities, there's not really a lot going on here at all, other than a few small purchases and sales every once in a while. For financing activities, they have been issuing debt for about 3 of the last 4 years, but in 2024, they did reduce their debt a little bit, which is kind of surprising considering the situation they're in. But either way, it's still possibly a positive sign. They did have 100 million in net income, so using some of that to reduce debt is pretty good. And then free cash flow, similar to operational cash flows, is very rarely positive. They've only seen 1 year of positivity in the past 10, so not too great there either. Moving on to the ratios, this is where we should see some pretty decent improvements for the company. So gross margin has been increasing for 3 straight years. SGA to sales has also been increasing, which is a little concerning. Up 5% in 3 years, while gross margin is also up 5%. So they are kind of canceling each other out, but not too much. Looking at the operating margin, it is almost never positive, and it hasn't been positive since 2016, which is not great. Net margin, though, is almost at 10% and has been increasing for 5 straight years, which is fantastic. The fact that that is happening is kind of surprising, but either way, it is a good thing to see. So I'll take a win when we see it. And other than that, debt to equity is actually only at 58%. So a lot better than I originally thought, just with that mental math I was trying to do. But overall, 58% is a really good number. They have a lot of room to take out more debt if they need to, which hopefully couldn't fuel future growth, possibly. We'll have to wait and see. But overall, this company, I will give a very cautionary sell. It just doesn't seem like they're growing very well. Their stock price is a lot higher than it has been in the past 3 years or so at the moment, or at least it's on the higher end. So in my opinion, that applies some downside. And without any super meaningful growth, obviously there is profitability growth, which is really good. But overall, I just don't think that will be enough to offset the decline in confidence following their sales. So overall, doesn't look fantastic. But anyway, that's all I got for today. Make sure to subscribe, and I'll see everybody in the next video.